So, ladies and gentlemen, myself and Paul would like to welcome you to this afternoon webinar here in Europe, at least. If you live in Asia, in Australia, it should be late night. So I'm here to introduce you to Paul Wallace and then pass it the mic to him so he can do the session. My name is Theo, for those who don't know me yet. And here at Admirals, we put together some webinar series that they can make your trading and investing journey much more interesting. Just to make sure you have all, let me show you, you have all downloaded the Admirals mobile application. It's our native application. You can download it on your devices so you can monitor your accounts, you can place your trades. It's really cool. I use it a lot lately. You can find it on the App Store, on the Google Play. And of course, just make sure you know how to find our weekly podcast. I go in about 3 to 5 minutes through the major market events on Monday, so it's going to be easier for you to keep up with the latest news. And please make sure, let me share with you the screen. Please make sure you follow us on YouTube and you subscribe on the channel. I will share with you the link below. If you scroll a little bit down here at the Trading Spotlight, you can find all the recording webinars Paul, Jens, and myself doing. If you scroll down a little bit more, you can find the live trading recording webinars, and you can subscribe to the live trading sessions I do Monday to Friday from 7:30 GMT time to 8 o'clock, just for 30 minutes. We go through the analysis of all the markets, the indices, the currencies. Also, we have the Admirals Instagram page. Here is the link for you as well. We put a lot of reels here when Paul is about to do his webinars. Always we have some interesting brief content, so that's awesome. And the last one, it's the Telegram page, so you can be informed when major announcements, we always put them here. And also variable, interesting investing and trading concept. So and if you haven't had the opportunity to find where our weekly podcast located, you go to Admiral's website, you go to analytics, weekly trading podcast, and you can either play it from here, you can download it from, you can download it to your devices, you can share it with your friends and family, because they all will know what's going on in the market in a very simple format, right? Not something complicated. So enough from me. It's time to pass it on to Paul so he can educate you today. And I'm sure, as always, lots and lots of value will come from Paul. It's an exceptional trader, an exceptional educator and personality. So please pay attention to him and you're going to gain a lot, I'm sure. Paul is on you now.
Fantastic. Thank you, Theo. Thank you for the introduction, and welcome everybody. Welcome to our session today. Great to see you all here, and thank you for those kind words from Theo, and also from the in the chat box. Thank you, Peter. That's very kind of you to say that you've been really enjoying these webinars. That we try to help traders. We love really being able to educate and help traders on their own. Take away and utilize in their own trading, and that's what we want to do. We want to share with you concepts, ideas, setups, okay, utilizing your own trading from tomorrow. That's our aim with these particular sessions. So without further ado, why don't I just bring up the slides, and let's have a look at what we can get through today. So let's bring these up here. There we go. Excellent. So I'm hoping that you can all hear me. I'm hoping that you can all see the slide there. As always, okay, it's a case of, you know, we're really recognize that we have a broad range, okay, of experienced traders who join our sessions, from complete beginners to experienced traders, and you know, there will be something here today for all of you, okay, something for the new traders, something for the intermediate and experienced traders. We also recognize that we have a truly global audience joining us today, and so it's fabulous to see you all wherever you're from joining us here, okay, around the world. You know, we here at Admirals, we hope you're well, and we hope you're faring well in these interesting times and interesting markets. There is always plenty of opportunity. But today, today's session is all going to be about the star formation, and that's what we want to kick in. Now, of course, it's always interesting to know of those joining us here live today. You know, do you know what the star formation is? How do you understand it? Are you able to utilize it in your own trading? You may never have heard of it. It might be completely new to you. That's absolutely fine. That's what these sessions are. But if you've got experience, or if you think what they are, put it in the chat box. It'd be great to hear what your own personal particular experience of the star formation has been. It's a very simple price action setup, which we can utilize, you know, in all of our trading. And remember, we here at and even the Admirals Supreme Edition. If you have any questions about Admirals, please get in touch with your account representative, and they'll be very happy to help guide you. So, you know, here we are, the price action trading guide. Okay, so we're going to talk a little bit about, you know, what is price action trading for those complete beginners, and how can it help a new trader. But we're going to look at star formations, and in particular, what are the morning and evening star patterns? Where are you likely to find them on charts? And how do we trade markets using these star patterns? And then what we'll do is we'll switch across to live markets to have a look at live sort of star patterns that have either set up, you know, at the moment or in the last day or two. I appreciate that, you know, we can go through lots of slides about the charts, but actually being able to see it in live time, how it sets up, you know, in real markets is always a bonus. So be sure to stay with us to the very end when we switch across to the live markets to look for shorter term trading, and those will be all helpful and useful. I'll be able to share my own particular insights and formations. So, as its slide says, we're continuing our new series based on helping traders understand and utilize price action in their trading. It's easy for new traders to be intimidated by the amount of knowledge required to be able to analyze markets. However, with a little bit of education and understanding of how candlesticks are formed and how price action forms over time, then it becomes easier to analyze and understand markets. So each Wednesday, we will build upon the previous session so that you're educated and informed how to use price action in your trading. And what we will do is we will build it into creating your own simple price action trading plan. You know, and for those of you who are really completely new, don't really understand what price action trading is at all, it's just a basic means of market analysis using price movement over time. It is popular with both retail and institutional traders. And we're analyzing the changes in price over time. That is the action, all right? And that's what we'll be looking at. Typically, we're going to be focusing on price action over perhaps the last 3 to 6 months, but also respecting longer term price movements. The good thing about price action is that once you learn to read it and understand it, be able to analyze markets using it, well, then it really is both. That means whether you particularly prefer to be a long term, to be a sort of short-term aggressive trader, okay, of 1 minute, 5 minute, 15-minute intraday charts, you'll find that price action will work and help for you. The quicker you're able to understand the concepts, quicker you're able to identify some of the particular setups that we're sharing with you, the quicker you'll be able to sort of embed it into your trading, be able to utilize it to help you make better trading choices. So we're going to focus more on the kind of, let's say, the longer term, because I recognize that people here joining us will be lots of people who, you know, are trading around a day job. They don't have the opportunity to trade all day full time. So, you know, trading for them might be an hour or two in the evening or in their morning, or, you know, around their job, their family commitments, etc. And so being able to look at a little bit of a longer term allows those people to sort of quickly engage with markets. But as I said, the underlying concepts are absolutely applicable to all instruments and all timeframes. So what have we talked about previously? Well, in session 1, we did a little bit of an intro to price action trading. Session 2, we talked about the engulfing candle, okay? A candle pattern that doesn't happen very often, but when it does, at the right time and place, is very important and well worth taking care of or taking interest in. Yesterday, or last week's session, we talked about how to identify a trend, okay? How to use higher highs, higher lows, and even moving averages. Today, we're going to talk about the star formation. What you'll find, as my colleague Theo said, is that all of those particular sessions are on the Admirals YouTube channel, okay, and on the Admirals website. So be sure to sort of, you know, click in and register and watch those to help build up your sort of your knowledge and understanding of price action. So let's talk about star patterns. Morning or evening star patterns. Very nature, candlesticks are a reversal pattern. All right. And people forget that sometimes. People forget that. And that what they mean is, you know, they try to trade candlesticks, simple price action setups when markets are in a range. And actually, that's not what they are best for. Always remember, candlesticks are a reversal pattern. So you need something to reverse. Okay, you need to have a little bit of a trend, a little bit of momentum, a little bit of movement to actually sort of, you know, almost validate that particular candlestick. There's lots of very popular candlestick setups. Let's bring up the old drawing tool here to help us. Okay, you'll have heard us talk about, you know, rejection candles and pin bars. That's pretty much just kind of like these ones here, okay, which we'll do a piece on in a few weeks' time, just specifically on that. Let's just move this up a little bit. We're also having engulfing candles, okay? We did that in session 2, right, where the candle also completely engulfs. And we also, you know, we'll look at things like key reversal candles, okay? Key reversal candles, which is a session that we will look at in particular. And what we'll see is that morning and evening stars are part of those same price action reversal patterns. And as I said, you know, practicing these, understanding these, learning these, by being able to recognize these, or having the cognitive recognition to be able to see them on charts, or in today's modern age, have, you know, particular plugins or algos that can recognize them for you. They are the sort of, let's say, the building blocks of good price action trading. And we will dig deeper and deeper into that as we go on week by week by week, ladies and gentlemen. So what is a morning star pattern? How does it play out? So, and here's the important thing. Remember what I just said, you know, a candlestick pattern is, or a price action pattern is, a reversal pattern. The morning star pattern is found at the end of a down move at a support zone. And this is something that, you know, I kind of particularly find important, is that, you know, I prefer personally is that, you know, when I see a particular price action pattern, I also like to see it happen at a particular level of support on resistance. When I see that, what I'm getting is confluence of events. Those of you who've joined me before will know I talk constantly about having a confluence of events. This is where you'll have 2 to 4 things coming together at one particular time and place. That is a good trade setup. It's not going to get any better than that. We need to be on to the trade. And so a morning star pattern is where we see it at the end of a down move at a particular support zone. What we normally say is a 3-candle pattern, okay? You know, 3-star patterns, all right, or 3-candle patterns, that is what we're actually aiming for. What we normally see is we've been in a downtrend. Price has been moving down, it's been making lower lows, lower highs. We normally get the first candle is good size, and it's a bearish candle. It's normally a strong bearish candle. And actually what's happened is probably they've seen that some of that, and there's lots of people who've been sat on the sidelines and are thinking maybe I should be shorting that candle, and that's what they've probably been doing during that particular candle formation. The second candle, candle number 2, is usually a small bodied candle, and it might well be either or a doji candle. All right, and we will look at doji candles in particular, but a doji, that's what we're normally expecting for candle 2. Is a good, strong, bullish have taken over the market. So, as I said, it's a particular three-bar pattern, okay? 3-bar price action, 3 candles, strong bearish candle for the first one, a second candle, which is either a doji or a rejection candle, followed by a third candle, which will be a strong bullish candle. And as you can see for yourself, we're basically working out that basically the bulls have stepped in. They have taken control, they're in charge, and we're expecting the higher probability move is longer term over the next few sessions to the upside. The reason it's called a morning star formation, this sometimes helps you with trying to remember, is that what we're seeing is that it's like morning, it's like the dawn, it's like the sun is rising. And that's what we're seeing here with this price action here. It's been kind of down and dark, and actually as price is rising, it is like, it's like the sun rising at the start of the day. It's like the morning, okay? The morning has come to us, and that's the morning star pattern. So it just always helps if trying to remember, or if you get confused between what's a morning star and what's an evening star. The morning star pattern is like that, okay? Where we're seeing the price is reversing from bearish into bullish. So as it says there, it's called the morning star pattern because it's considered a sign of hope in a bleak market downtrend. In perfect examples, the star will have no overlap with the longer bodies as the market gaps both on open and close. However, especially in today's modern electronic markets, and in particular FX markets, it's very rare that you will have a gap between candle 2 and candle 1. That's just, as I said, because the nature of 24/6, 24/5 electronic markets, okay, it's unusual to happen. But when you do happen, or you see that, or you might see this in let's say equity markets, okay, where there are confirmed and very definite open and closes of the particular market and stock exchange, that might actually occur, and that's what you might like to see. But generally, it's much rarer to see that these days because of the very 24-hour nature of electronic markets. So with that in mind, well, actually, how do we enter? How do we trade them when we particularly see them? What's our particular edge that we can utilize? Well, we'll look candle 2, which is followed by a very strong bullish candle for candle 3. Okay, when candle 3 completes, looking to buy the market. Our stop loss, because we never trade, particularly looking at and interested in terms of how we look to work. Thanks, Raquel. Sorry, I'm just hoping that maybe my connection's a little bit scratchy there this afternoon. Everybody's plugging in and want to watch this, what's going on with the markets as well. But, hopefully, as I said, you can enter on a morning star pattern when you can buy the market at the end of candle 3. Stop loss goes beneath the low of candle 2. Your target is twice your trade risk. That's what we're looking for when we're looking to trade the morning star pattern. So that was the morning star pattern. let's look at the opposite side. What is the evening star pattern? Well, not unsurprisingly, it is the reverse. Okay, it's the flip of the morning. The pattern is found at the end of an up move, preferably at an area of resistance. Remember what I was just saying there a couple of slides before. Okay, all of these candlesticks, price action patterns, they are reversal patterns. So you need to have something to reverse. That's what we want to see. Okay, and the star formation is the same. We want to see it at the end of a move. That is what's happening, because actually what it's showing us is that existing trend is over, and we're now likely to get a new trend in the opposite direction. So remember, it's almost like the flip of the morning. Bulls are starting to run out. And then we have a third strong bearish candle indicating that the bears have taken over. Okay, they have wrestled control of that market from the bulls, and what we're seeing is basically price drifting down and falling away there. So three candles involved in it. Strong bullish candle for candle 1, a small bodied candle for candle 2, preferably as the start, indicating indecision or that the market is turning. And the third candle is a strong bearish candle indicating that the bears have taken over. So as it says there, in the perfect examples, the stars will have no overlap with the longer body as the market gaps both on open and close. But as I was saying, for the morning start, that tends to be only for equities, okay, that we see that these days. It's rarely the case in the modern electronic markets, which are operating 24 hours. Okay, it's normally that we will see that you won't see that, you will see an overlap. And that's absolutely fine. That's absolutely fine. What you see there, okay, on your chart there, okay, on the slide, is a really good example of the move that we can see there, okay, that will have a strong up move, second candle with some indecision, and then we roll over and fall away. And that is the evening star pattern. So how do we trade the evening star pattern? That's what we're interested in looking at. So it's the opposite of the morning star pattern. When candle 3 completes, you can sell the market. We're looking to sell the market, okay? So this is candle 3 here, okay? When candle 3 completes, we'll be looking to sell the market. The stop loss goes above the high of candle 2. The target is twice the trade risk, okay? So the difference between your entry and your stop loss, that is your trade risk. And then what we're looking to do is effectively to work out twice our trade risk. That gives us a particularly good target. It gives us asymmetric reward to risk on our particular trade. That is what we're looking for. And, you know, that is quite a nice example there, okay, of an evening star pattern that has occurred, you know, at a particular significant level of resistance. That's what we're looking for. Remember what I was saying earlier. We're looking for confluence of events. That's what we're particularly interested in. What we're seeing where 2, 3, 4 things all come together at one time and place that give us the confirmation, okay, or give us the confidence that, you know, the higher probability move is to the downside. We want to be a seller. We want to be short and be able to ride that move. And that's what we're looking at. So, you know, there's just a couple of examples. Pound against the US dollar on the daily chart. I am an artist, ladies and gentlemen, but it was a pound lead its way up here strongly. Apologies, everyone. I seem to have a little bit of an internet issue there. Apologies. I hope that back in the room, hope you can all hear and see me. Again, if you can let us know, that'd be great. I apologize for that and stuff. We just had a little bit of a bounce there, didn't we, in terms of the internet? I apologize for that. But I'm hoping that you can still hear me, hoping that you can see me, hoping you can see the chart. Thank you, Raquel. Thank you, Peter. I apologize for that. It's always the way, isn't it? Okay, it's clearly every man and his dog is wanting to trade those American PPI numbers this afternoon. That's what's got everyone excited. But as I was saying, here we are looking at an evening star pattern, and here on the pound against the US dollar daily chart, what we had was basically price sort of rallying its way up. We had a strong bullish candle, followed by a smaller bearish candle, which was also a rejection candle. We had a really good strong wick to the upside. That's starting to tell us that the price is reversing. And then we had a very strong, good bearish candle. Now, I like to see, as I said, for candle 3, I like to see a strong bearish candle. And I'll explain to it when we look at live markets why that is the case, because I'll show you maybe 1 or 2 examples which, perhaps not ideal, so that you can see what looks like a good setup and what is, let's say, a suboptimal one as well. But we can see that it did that, and price moved its way down to twice its trade risk. And that's what we're looking for. So we're looking to reverse. What we're looking to see. Here's an example of the morning sun. What we had was, we had a bearish candle, followed by, a second candle, which was an indecision candle. Some people would call that a rejection candle. Some people would call that an indecision candle, a doji. Some people would call that a high wave candle. But what we're seeing is that, that bearish move is not happening. We're looking at here. I'm just because what we're looking at is once candle 3 is completed and it's strong bullish candle, we have basically a close there with our stop loss beneath candle 2, and then we're looking for our trade risk to be twice our target to be twice our trade risk. So just remember that, ladies and gentlemen, that becomes quite important when we look at some of our particular setups, because if the range between our entry and our stop loss is too big, especially when we look at intraday markets, what can happen is that we might be sort of just giving ourselves far too much to maneuver within what might be the average range within that day. So it's always worth noting that, and I'll hopefully show you 1 or 2 examples. And this is just a scrappy one here. This was on the DAX. This was a weekly chart on the DAX, just to show that not always the charts aren't always clear and clean and pretty. Sometimes actually they can be a bit scruffy. That's the way trading works. Price had actually been in a downtrend. It had moved down. We had this big strong candle, big strong bearish candle. On the morning star. What did we see for candle 2 in the weekly? Well, that is a very clear, small-bodied, doji indecision candle. And then the next candle, next week, is effectively a very strong bullish candle. And what we would be looking to do is enter at when that market candle closes and the new one opens, stop beneath level 2, and then letting price drift its way north. And that was on a weekly chart. And that's one of the things, particularly with star patterns, is it can be very useful for longer term trading, because invariably you have the opportunity to watch the setup develop. If you're trying to trade it on a 1-minute chart, things are happening very, very fast indeed, and you have to be able to sort of know exactly what you're looking for and know what you're how you're looking to operate. And that's why I often say, with looking at price action patterns, if you start at the higher time frames, weekly, daily, 4-hourly, hourly, even, you can get practice at being able to recognize the pattern, see how it plays out, work out where your entry would be, work out where your stop loss would be, work out where your target may be. and it allows you to get into a pattern so that you can operate and you can engage and you can complete that sort of trade. And of course, as you get better practice at it, well, then it becomes easier to see it as if you particularly look to trade down into the lower time frame. So in conclusion, ladies and gentlemen, before we switch across to the live markets, and as I say, we'll have a look at some good examples in the live markets, is that what we often find is that many new traders overcomplicate their life by trying to trade complicated trading strategies, when actually, for most people, following a simple plan would actually help them more and better for them. The morning and evening star patterns are powerful price action reversal patterns. The morning star pattern occurs at the end of a long downtrend. The price action reflects buyers stepping in and taking control of the market. The bulls are in control. The evening star pattern occurs at the end of an uptrend. The price action reflects sellers stepping in and taking control of the market. The bears are now in control. The patterns work across all time frames and all instruments. As I say, they're time frame and instrument agnostic. So whether you're trading 1 minute charts or 1 month chart, once you start to recognize star patterns and star formations, you'll be in a position to trade them wherever you see them occur. And that's actually, just as I said, that's a great skill to have as a trader, to be able to have simple setups that you can work with and trade across any time frame and any that gives you, it's a great set of traders guide. Next Wednesday, 19th October, join us for the next session where I'm going to be talking about preparing for opportunity in your markets. What do you need to do as a price action trader to get yourself ready for your trading session? Okay, how do you prepare? How do you get yourself sorted? The things you need to be doing. Why do we have a routine? Okay, how can it help us in trading? Where do we go looking for our opportunity? So that's next Wednesday, 19th of October. Check your inbox for the webinar link or head over to the Admirals website to be able to register for the live webinars. As always, you can contact Admirals there, as you see. global@admiralmarkets.com is the email address. And of course, as I said, this session and all of our other sessions, they're on the YouTube and the Facebook channels there that you can see. Okay, and by all means, you see that, and also the content created by my colleagues also. So just bear with us a moment. What we're going to do is going to switch across the live chart and have a little look at what's been particularly going on there at the moment. So just bear with us a moment and we'll bring up the charts. Excellent. Okay, so here we go. I hope you can still hear me. Hope you can still see me. I apologize, as I said, we've had a little bit of not the best internet connection there, and hopefully you can hear me and you can see me as well. So why don't we have a little look? This is just a Admirals MT4 platform. During these sessions, we'll use the MT4, we'll use the MT5, we'll look at the Supreme Edition as well, so that you'll get basically a good grasp and handle on the whole of the Admirals platforms and what they actually offer to you. So here we go. Here's the weekly chart of gold. I thought maybe we'll start with that. What do we have here? Well, we've got a couple of orthodox and unorthodox star formations here. Let me just bring up the old drawing tool. First one is actually, the first one I wanted to draw to your attention, and it is kind of a little bit different, but it's still regular in the sense that we had price on the weekly chart rallying its way up here. We had candle 1 here. Candle 2 should be normally a small little candle, but in this particular case, it was a significant rejection candle here at the big price, the big round number of $2,000. Then candle 3 was a very strong bearish candle. So price had come up, it reversed and fallen away. And that is what we were looking for. It's a reversal pattern. Remember, that's what we're looking for. And it would have been challenging for lots of traders here, because actually price pretty much went sideways for a few weeks before it started to do its drop. And actually it started to drop, and it dropped quite significantly, as you can particularly see. Now, what I would be suggesting there is, okay, of course, normally we would say is that, of course, the price that you'll be selling here once candle 3 completes with your stop above 0.2. That is invariably, not really sort of suitable because of just the size of the candle in terms of the trade risk. What you'd be looking at as you become a bit of a, let's say, a savvy price action operator, is that because that's the weekly chart, you'd probably be delving down into the daily and 4-hourly charts to get sort of tighter, smarter entries, recognizing that the longer term trend is kind of likely to be down. Actually, what happened is, we finished it here, okay? Candle 1, candle 2, a rejection candle, candle 3. And price actually rallied up. Sort of had candle 1 here, price in a downtrend, is in the region of the 200 period moving average. We had a rejection candle here. This is candle 2. And then we had candle 3. Invariably, what we saw was a good bullish candle that closed higher than the candle 1. And that is significant to me, just sharing, is because I don't normally like to see big wicks, okay, on my candle 3. Okay, what I'd actually prefer to see is a much stronger close. I want to see a big, strong, bullish close. But in this particular case, what we did is we closed above candle 1. Okay, so I'm looking at the momentum has particularly shifted. So that's just a little bit of a kind of additional sort of, let's call it, additional trader tactic, a trader tip that you might want to take on board when you're looking to sort of, look for the very best setups. I think we had one a little bit on the 30-minute chart with gold here. There's a couple actually is interesting yesterday. All right, let me just show you here. This is the 30-minute chart from gold, okay, from yesterday, and just looking at what were good setups, what were not. And let me just bring up the drawing tool here. So this is the 30-minute chart. This is from yesterday. Price had come out of the Asian session, had drifted down. What we had was, price was moving its way down. We had candle 1, which was a bearish candle, followed by candle 2 here, which is kind of a high wave indecision candle, followed by candle 3. Okay, candle 3 is a very strong bullish candle. The challenge you have, okay, is once again is that the entrance here and the stop here is quite big. Okay, and remember, on an intraday base, we've got to realize that could it actually make twice its target? Now, of course, in this particular case, it did, but we don't know that at the time. Okay, in hindsight, it's always easy, but we didn't. But actually, price moved its way up, and then price printed a bear flag, which was also once again another star pattern. Okay, another morning star pattern. Candle 1, candle 2, a rejection candle, candle 3, strong bullish candle. And this one did actually work quite nicely as it rallied its way up through the rest of the day. What we also saw then overnight in gold is price basically, it descended overnight. And actually what we saw here, and this is over the Asian session, so it wasn't a trade for me. I was firmly tucked up in my bed, but it's still an example of having traded our way down and drifted our way down. We had candle 1, candle 2, candle 3. Okay, the price had reversed, okay, and rallied its way up. And then what we had at the start of the European session this morning was candle 1, candle 2, which is a rejection candle, followed by candle 3, which is a strong bearish candle. Now, remember what I was saying here is just before is that this would have made for a very, very big kind of very, very big trade risk. And it sort of it almost kind of, it knocks itself out. Ideally, let me just draw the closes. Ideally, what we're looking for is, we want nice, small, tight star formations like that, especially on an intraday basis, rather than really very big ones. Because remember, if we're looking for a 2-to-1 trade risk, we need to know and understand that the average range of the movement for that session is enough that we could actually sort of, achieve our particular trade target. So just remember that, it's a case of just recognizing we prefer the sort of smaller, tighter, cleaner ones. But if you look at markets, you don't always get what you want, but being able to even just recognize when you have star formations might be an idea in terms of understanding that the market is reversing, the market is shifting and changing, and there might be ways to work with that. So that was on gold over the last sort of day or two. What else can we have a little look at here? I think even we had a look at, let's have a look. What can we have a look at here? Pound, okay, we're on sterling. Let's have a look actually. What I wanted to see was, yes, okay, here's a good one from just as before we started off here. between yesterday's high, which is this blue line, okay, and also the previous week's high, which was just above. See if I can zip in and zoom in a little bit here on this. Let's see if we can zoom in a little bit. Yeah, here we go. That makes it a little bit better. We have the move up, candle 1, candle 2, candle 3. Price had completely reversed, and what we see there is, that's what's been going on the 5-minute chart for the pound against the Aussie at this particular moment. So, there's one that was just setting up, what's that, about an hour or so ago, just over an hour or so ago, as we were getting ready to come into the session. But it's about recognizing there's a clear reversal. Okay, it's a confluence of events. All right, okay, a couple of things coming together that can actually help us and work with. Where else? What can we have a look at here? Let's have a look at maybe something a little bit different. Oil, West Texas 5-minute chart. Okay, West Texas 5-minute chart. Okay, so for today's session, what we had here, this is a 5-minute chart. That grey box is my Asian session. Price, rallies out of it, comes back down to it, and it comes back down to here to the 50-period moving average. There is candle 1. There is candle 2, the rejection candle. There is candle 3. Okay, good, strong, bullish candle. You're entering there, the stop is there, price rallies its way up. Okay, rallies its way up. And what finishes it? Well, we have candle 1 here at the previous high. We have candle 1 there, followed by candle 2, followed by candle 3. Price drifts its way down there. Okay, I think you might have struggled to get your 2-to-1 trade on that. Okay, I think once price had drifted sideways, you'd be stepping out of that. But it's a different instrument. It's a 5-minute chart, just showing that even on the session, once you start to recognize these patterns, they show up time and time and time and time again. And once recognize and have the ability to do so, well then you're in a position to sort of operate and work with them quite simply. Let's have a look at cable. Cable on the 30-minute chart for yesterday was a particularly good setup, and we actually saw a few of these. Price drops down. This is candle 1. That's fair enough. And then here at where the is effectively what we saw was candle 1 here, candle 2, followed by candle 3. That is a morning star formation, and price rallied its way up to the 200-period moving average there. So it just shows that lots of this price. Okay, there's lots going on, but it's about waiting to see good setups. We want tighter setups. We want very clear setups. Okay. There's lots of people try to sort of just look at very scruffy setups, and I can show a few just to show how they appear. But really, ideally, that's what we're looking for. Okay, a nice, clear setup that gives us a confluence of events. That's what we are always particularly looking for. So let's just finish up with 1 or 2 other quick ones here that we can have a quick look at. So what have we got? FTSE, pound again. Yes, interesting one here on FTSE. Okay. The FTSE here, this is the weekly chart of the FTSE. Hopefully you can see that. And what we've looked at, this is over the last, this is really over the kind of the year. And really what we've been in 2022 is really sort of stuck between the big round number of 7,000 on one line, and then the highs of around about 7,650, 60 on the highs. And what we've been interested to see is, this is, as I said, a weekly chart, is that every time prices got up to those kind of highs, that invariably here, what we've seen is candle 1, candle 2, candle 3. There is an evening star formation, and price drops. Price rallies back up. We have candle 1, candle 2, candle 3, another evening star formation from which price drops. Price rallies up again, candle 1, candle 2, candle 3. It's an evening star formation. It's a big one. Okay, you might not necessarily trade that on the weekly chart, but it is telling you that the market is reversing and it drops back down to 7,000. Price rallies up again. Candle 1, candle 2, candle 3. We've got another evening star formation from which price dropped back down to that 7,000 level. So hopefully you can just say, as I said, one of the things about recognizing star formations is that once you can see them and understand them and see how they work across all time frames and across all instruments. And that is a really useful tool to have in your trading armory, because it means you can look at anything, can trade anything, and that can be really helpful, regardless of whether you're a long-term trader, okay, on weekly charts, or you're a very short-term trader on the 5-minute charts, like we just looked at there on the West Texas oil and the pound against the Aussie. So there you go, ladies and gentlemen. Unfortunately, we've run out of time. As always, I could go on all afternoon talking about different types of star formations. However, we've run out of time. I apologize for the internet connection during our session. We were at in the sort of lap of the gods, of the lap of the internet gods and stuff. So I do apologize for that. But hopefully you're able to join us and follow us enough to recognize the simplicity, okay, of the star formation and how to be able to recognize and trade both morning stars and evening stars. Just remember, okay, they are reversal patterns, so they need something to reverse, okay? No use trading them in a tight line of consolidation. We want to have something to reverse. So my suggestion is go away, study this, okay, go through them, look at your favorite trading instruments and just start to identify where there were star formations, how did they set up, how did they play out, and is it something that you could utilize in your own particular trading? As always, I want to wish you the very best of success in your own trading endeavors. I look forward to seeing you on the next session for our Paul's Ultimate Price Action Trading Guide. And, as always, trade well, ladies and gentlemen. Thanks.